Tesla's going to try and build cheaper Teslas in Germany, and that could maybe be a game changer.
What needs to happen to get to that mass adoption? We know Tesla has time and time again laid out the fact that they are aiming to increase vehicle deliveries to 20 million by 2030.
What you're looking at with Tesla right now is do you believe?
We have a lot of Seaport clients that own the stock, and clearly they've done very well with it, including this year. And they are absolute true believers. They love Elon Musk. I mean, the guy is a genius.
All that and more. So let's get to it.
Reuters was reporting that Tesla's going to try and build cheaper Teslas in Germany, and that could maybe be a game changer.
So the idea of a $25,000 or euro EV has been long-standing. They first talked about it in 2018. Reuters reporting that this is going to be done out of Berlin. I've talked with sources at Tesla about this morning. I've been talking to them about it all year. The idea of a $25,000 or euro EV never went away. It's just been delayed, as Musk often does, kicks it into the long grass. But a lot of people thought it would happen in Shanghai first, and it looks like it's happening, according to the Reuters report, in Berlin.
I have no doubt that the Shanghai plant, the Berlin plant, and when Giga Mexico finally comes online, these things will happen simultaneously. In my models, I have Sierra Leone as my #1 producer of this next generation vehicle. I mean, the factory is going to be designed to make it. But right after that, I have Shanghai and then Giga Berlin. It only makes sense that you would modify your factories in accordance to producing these vehicles. Currently, the Model Y is the best-selling vehicle worldwide, but this vehicle right here will shatter delivery expectations. Higher volume, reduction in COGS, equals holy levels of production.
And that's interesting because in Europe, where Gaia's VW's announced a 25,000 euro EV, the consumer there is used to smaller form factor, affordable cars. And Berlin has incentives and capacity to do this. Shanghai is kind of busy at the moment, so that's kind of interesting.
The Chinese are really in Europe now, and you've got Stellantis doing it, Citroen's doing it, as you say, Volkswagen trying to lower the price point. Is this just a recognition by Musk that in order to compete in Europe, he is, with the Chinese, for market share, he is going to have to produce lower cost vehicles? So, is this about the European market, or is it about the Chinese still?
I go back to what the product actually is. Remember on the last earnings call, Musk described it as utilitarian in its concept. You know, we always forget, because it's been a while since we've talked about the end vision for Tesla, which is where they control the fleet of ROBOTAXIs that are just former consumer cars they've taken back and control through software. So the price point is as much about getting volume out to everyday people and then bringing them back as it is a ROBOTAXI sort of based system rather than selling direct to the consumer.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother. Right. Tesla's delivery and production numbers are just the tip of the iceberg. Once full self-driving sheds that beta tag, damn near every vehicle Tesla has created beyond 2016 will find itself generating massive levels of revenue, either in the hands of consumers or refurbished by Tesla themselves. It's gonna be one hell of a magic trick conducted by Tesla. Everyone over here is distracted by the delivery numbers, production, volume, margins. But while over here, Tesla is poised to deploy a massive ROBOTAXI fleet with the flick of a switch via an over-the-air software update. It'll make Cruise and Waymo an afterthought when you think about the volume and the general application that Tesla sees FSD being. No limitations, no wait times. Which product would you choose?
We're also watching shares of Tesla today popping in pre-market trading as we are getting reports out of its operations in Germany. According to a Reuters report, the EV maker is working on a more affordable vehicle in its Berlin factory that would cost about 25,000 euro, which is well below the average price of an EV in Europe, which Auto's research from Jeto Dynamics has found to be over 65,000 euros in the first half of 2023 here. You think about where the pricing strategy has continued to either come into question or just be more made known at Tesla, especially given around the world where they're looking at different regions and figuring out exactly at what price point they're not only able to perhaps catch the eye or catch the mind share of potential buyers out there, but then also at the same time where they can set the base price so that they can also see some sort of upgrade, because the packages as well that they're laying on top, that's where some of those margins really come into play.
Currently, Autopilot FSD beta coming in at 12 grand. That's margin that these mainstream finance media analysts aren't calculating, but it's not their fault because most of Wall Street isn't calculating that extra 12 grand per car. And that's at these prices. Once they crack that nut, you best believe the price is going up.
Exactly, and I think obviously getting a more affordable EV is huge. When we talk about EV mass adoption, what exactly is needed to really get those numbers significantly higher from where they are today? Many analysts that we have talked to, and even auto executives here over the last several months, going back several years, they talk about the fact that they need to make EVs a bit more affordable in order to really increase adoption numbers. So you take into account this potential price tag, if this report is correct here.
Oh, madam, it is correct.
About Tesla developing a cheaper EV would equate to just about $27,000 here in US dollars. That's considerably cheaper than what is on the market right now from Tesla. Taking a look at the Model 3 right now, and that starts just below $39,000. So obviously many of their cars, and that's the lowest end of their cars, right? So many of them are much more expensive. People certainly cannot afford it in this environment right now. And also coupling that with the higher rate environment obviously makes more expensive cars less affordable to more and more people. When you talk about exactly what needs to happen to get to that mass adoption, we know Tesla has time and time again laid out the fact that they are aiming to increase vehicle deliveries to 20 million by 2030.
Yeah.
They need a cheaper vehicle, you would think,
absolutely,
in order for that number to be attainable. So if this, in fact, is true, they are building a cheaper EV. This could be a huge opportunity for Tesla, and then we'll also see what that means for some of their competitors out there, too.
And this particular factory, this Gigafactory, Berlin-Brandenburg particularly, it is known for making the Model Y. However, you think about the overlap and the synergies that they have in production between the mass market Model 3 and the Model Y. 75% of the Model Y is actually the Model 3. And so all of that considered, that production kind of manufacturing ability and the overlaps there, perhaps that gives them a little bit more of that ability to crank out more vehicles within this Berlin Gigafactory as well over the future too, to hit some of those goals you mentioned.
Part of me thought that it was possibly the Model 3 being constructed in Berlin at a very cheap rate. If you can't make it and sell it cheaper in the Chinese market, it's probably not that vehicle. But it is interesting to note that the Model Y is 70% of what the Model 3 is. That level of efficiency must be passed down to the next generation vehicle.
We're talking Tesla. Shares are up nearly 80% so far this year in 2023. Bounced pretty significantly this week off of multi-month lows. Kevin, when you look at this company, margins still just below 18%, better than their competitors at this point. But we saw some weak China data earlier this week, fall of 2.6% from a month earlier as far as sales.
Major export hub in Shanghai. Tesla doesn't just serve the Chinese market when it comes to the Shanghai plant. Expect these numbers to fluctuate throughout the quarter.
It's making money selling EVs.
Yeah, there's a lot going on in Tesla. And I noticed what you noticed, Tom. It hit $200 or slightly below and really bounced off that number. And I think some of that had to do with the solemn tone of Elon Musk's conference call after their earnings. He was very concerned about interest rates, very concerned about higher interest rates making EVs or cars in general less affordable. So he was very Debbie Downer in his conference call, and I think that weighed on the stock. Now, it's bounced since then, and he does have some good news. He's getting, like I said, first thing, a little macro help from interest rates have come down. The Model 3, the revamped Model 3 that they're going to sell at a higher price may spur some good news out of China. The China numbers weren't as bad as expected in terms of some of their demand. So that's still a good area of the world where he's hoping to do well in. But you're right, Tom. This stock went right to $200 and bounced, now trading $220.
Yeah, Joe, there's still focused on production of 1.8 million vehicles for 2023. They usually or typically ramp up in that final quarter of the year. But I think a lot of the catalysts had to do with Ron Barron, the notable Tesla bull, coming out and saying, hey, this company can be worth $4 trillion. I know he's selling his own book there, Joe, but at the same time, he's been pretty right so far.
I mean, look, Kevin hit the nail on the head. They're profitable where their competitors are not in selling the EVs. You know, they've created a production cycle that allows them to make money where everybody else is losing on a per vehicle basis.
What? But don't worry, the competition is coming. And if Tesla can do it, all of the legacy auto manufacturers should be able to at least replicate what Tesla's doing, right?
Now, there's competition, and competition in China is really starting to show. I mean, you talked about this. Their EV segment in China went down to 9.9% in the third quarter. That's down from almost 13% in the second quarter. BYD's a big competitor there. And, you know, even though it trades a pretty high valuation relative to its competitors, the bottom line is it's kind of earned that to a certain extent because of its production capabilities and because of what it's done with its own supply chains. So, you know, what you're looking at with Tesla right now is do you believe?
Do you believe in love?
Right? Do you believe that demand will continue to remain strong with rates where they're at? Are people going to be able to continue with durable goods purchases at these type of levels? If they're borrowing at 6, 7, 8% a clip, you know, depending upon how many years they're going out to borrow for these cars. So I think you're making a bet on the consumer. You're making a bet on the adoption of the EVs. And
the consumer, at least here in America, has made no inclination that it's going to stop its purchases. At least individuals capable of purchasing these highly complex manufactured objects at $40,000 plus. Thank the maker that Tesla is only producing 1.8 million of these vehicles projected this year. It's true that not everybody can purchase a Tesla, but those that can seem like they do.
Coastal story as well too. Out here on the West Coast, you see them everywhere. You get to the Midwest, not as much. So it's, you know, it's slow adoption, but they are meeting their production targets and they are meeting their delivery targets, and they continue to do so. Now, you mentioned the gross margins have gone down. Absolutely, they've gone down. They're below that 20% clip that I think a lot of people were looking at as a really important kind of floor. But when you look at that relative to the margins that you're seeing with its two biggest competitors, it's still, you know, leaps and bounds above it. But once again, that, you know, that's why it trades at a premium.
Yeah, it's always traded at a premium. And I think Joe got a little dig there in on us, Kevin. He thinks that the people on the West Coast are cooler than us. They've got all the new toys before that we get them here in the Midwest. But be that as it may, Joe.
We need to be, Tom, we need to bring Joe out to the western suburbs of Chicago because believe me, there's a lot of Teslas out here.
There may be a correlation to why the Tesla vehicle is coastal. And that correlation simply implies that the coastal parts of the country seem to be a little more technical. Wherever you find tech-savvy individuals, you'll probably find a Tesla in their carport. Any car can take you from point A to point B. But anybody that knows software, Tesla can't be beat when you're talking about the automotive industry. In the middle of the country, that's probably less important than, say, on the West Coast. But don't worry, it'll get there too. It don't take all day to recognize sunshine.
Spotlighting Tesla today, the stock is on the move. You have the company increasing wages for the German factory workers, also looking towards a cheaper EV being produced at that factory. Ted Weisberg is here, president of Seaport Securities, to talk about Tesla and more. Year to date, the stock is up almost 80%, has been at higher levels prior, of course. What's your general thought on a stock like Tesla before I just sort of say all these details?
Well, it's been a great stock, Nicole. I thought the stock was a terrific short 2 splits ago. They would have carried me out on a stretcher a long time ago. I've never personally owned the shares. We have a lot of Seaport clients that own the stock, and clearly they've done very well with it, including this year. And they are absolute true believers. They love Elon Musk. I mean, the guy is a genius. He thinks way out of the box, very clever fellow. It's just not a name that personally that I've ever owned, but I've learned my lesson.
Doesn't own the name, but will be damned if he shorts the stock. Sounds like he had some third-degree financial burns, maybe?
What is it about a name like Tesla? Is it the type of product that they make, or is it something in the balance sheet or how it works? I mean, you've had, a couple of stock splits you noted. Right now it's at 220. The recent high was 299. Is there something in the Tesla balance sheet or something that, drives you away of saying this is one I would want to own?
Well, the issue for me early on was the whole electric vehicle, the EVs. I thought it was just a matter of time till the world would be manufacturing EVs everywhere. Listen, he was very innovative, way ahead of the curve, but clearly that has not necessarily been a problem for the stock. But now every major auto manufacturer is manufacturing EVs, some more successful than others. You can pick your poison. So they certainly don't have the field to themselves anymore. They got a ton of competition.
Right.
But I think with Tesla, I think it's probably more than the EVs. It's a very innovative charging.
Superchargers.
I mean, for example, we don't have the Tesla product at our home, but we have the Enphase product. So we have the battery packs to back up the solar panels on the roof. It's an interesting concept, but they are clearly very big in that space.
Tesla is an absolute unicorn when you're talking about the stock market. But somehow, some way, this unicorn is in the automotive industry, and I guarantee you, no automotive analyst could have predicted Tesla's success. It trades like a tech company, but as an automotive stock, you bet your ass this thing is heavily shorted, if not the most heavily shorted name in the stock market. In conclusion, a $25,000 electric vehicle coming out of the German plant would manufacture a vehicle with a greater total addressable market for the entire continent of Europe. I say, Elon, well played, good sir. Tesla is the only EV manufacturer that is making any money, and I'm pretty sure that's not by happenstance. That's not a coincidence, if you will. I mean, if it were easy, everyone would do it. And there's something about TSLA. It's a very hot button issue. Ted Weisberg and probably many of that demographic wouldn't touch Tesla with a 10-foot pole. And that's fine by me. I'll continue to accumulate TSLA at these low levels while they choose to sit on the sidelines looking for more sensible plays in the market. That's all I have for you today. Be easy. Peace.